It's time to talk currencies here on Dukascopy TV. Chris Beauchamp is a market analyst at IG, and we started by talking about the possibility of a yen intervention.
I think we're likely to see some sort of intervention from the Japanese central bank at some point. It's been a feature of monetary policy in Japan for quite some time now, but the issue is that their interventions are usually fairly short-lived. They can move the market for a short period, but then gravity tends to reassert itself. And what we're seeing is this a product of events that are outside of Tokyo's control. You're seeing easing from the US, which is driving down the dollar versus the yen. You're also seeing issues in Eurozone, which makes Japan a more attractive destination, which will push the yen up. And really, the Japanese are finding it hard to combat those forces over a long period.
We always have to talk about the Eurozone. Spain seems to be the epicenter at the moment. There seems to be a solution in place for Spain if they want it. The government seems reluctant to take the Eurozone up on their offer of another bailout. So what's your reading of the situation there?
I think we're in for a long period of negotiations between Spain and the rest of the Eurozone. But what we have to consider is that Spain is a much bigger economy than those other economies that have been forced into bailouts like Greece, Ireland and Portugal. So there'll be longer period of negotiations. But the likelihood is, although Spain will accept a bailout and will have to take some sort of terms on the ECB's own making, those terms are going to be lighter than those we saw for Greece and the others.
And what effect on the euro? We saw euro dollar move above 130 briefly after the Draghi statement and also the statement from Bernanke. Now it's back below 130, below 129 even. So how do you expect that currency to move in the next week or two?
Well, it seems to be a reassertion of that downward trend that's been in place, and that brief trip above 130 hasn't lasted very long. I think so long as the uncertainty persists around Spain and when and if it takes a bailout, then probably more losses for the euro against the dollar are in store.
But is the Spain situation, when run on the assumption that Spain's going to take that bailout, is that going to be a euro positive or euro negative?
It's a euro positive, I suppose, but then the problem with the Eurozone crisis, there's always the next domino in the line, and the issue is, well, once Spain has taken a bailout, do the markets then move on to Italy and look to see whether that country can sustain its own debt position?
Let's talk about the dollar. The dollar moved off the bottom of a 6-month low, the dollar index did. If we take the currencies as an ugly contest, how's the dollar looking amongst the other majors?
Well, I think certainly the US economy isn't doing as badly as some people think. It struggles, but there's innate strength to that economy, which will make the dollar more attractive versus certainly the Eurozone, which has its own set of problems, and against sterling as well. So what you'll see is probably greater strength there for the dollar, and also the resurgence of any crisis in Europe will drive flows in that direction.
How would you assess the greenback's relationship with risk? Because previously the dollar would weaken when there was good news out there in the markets and then strengthen as it was a safe haven during bad times. But that relationship doesn't seem so clear now. So how would you associate risk and the dollar?
I think it has moved slightly towards the fact that good data from the US causes a strengthening the dollar. Previously, there was so much worries about the US that it would drive the currency down. But now, with the economy seemingly picking up and also the uncertainty around the election, it seems to be that there's a general willingness to buy the dollar once again.
Generally speaking, where are we in terms of risk sentiment? After those ECB, Fed actions, there was lots of positivity in the market. That seems to be dying off now. Do you think we're going back to the recent norm of lots of negativities found in the Eurozone and that weighing on market sentiments?
Well, we did have a great burst of positive sentiments before those central bank actions, and then they delivered. And in fact, they delivered in a fairly substantial way. But the issue is now that markets haven't been able to press much higher from those highs that we've seen lately. What we need is a real set of positive news, but that's certainly lacking at the moment, with uncertainty over Spain and the US election and the US fiscal cliff, which hits towards the end of this year. That could mean that markets do struggle for the time being.
Chris Beauchamp speaking to me there from the London offices of IG. The interviews keep coming thick and fast here on Dukascopy TV, so don't go anywhere. But for now, goodbye.